Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, October 12th, 2021. We'll take a quick look at the equity markets, follow up on Treasury bonds, which were highlighted yesterday, and at least one other new trade idea I want to share with you that's on my radar, and that will be aluminum. So we'll start out here with QQQ, 60-minute chart. I'm just going to recap everything, break down right there the 60-minute bullish, bearish rising wedge, first target hit, second target hit. Bounce from there, at which point I laid out, added a third target, and I still think we're headed there. And then, and quite likely then some. I'll get to the daily chart in a second. Too early to say that, with the highest degree of confidence, that's what's going to happen, but I still, leaning that way. Here's our downtrend line, which we're still above on QQQ. Remember, we failed at the gap right there from that recent gap right here. And we've been moving lower since. We're coming in maybe in after hours right now. This candle, if you zoom in really tight, you see that white candle. I waited to the close today to do a closing market update. Yeah, there it is, back testing in the after hours. So, bulls want to see a step in here. But as I said, the closer we get to those previous lows, the more nervous the longs that stepped in and bought the dip are going to be. So, and as I've said before, recently, this is, without a close second, the most bullish setup I've seen on the 60-minute charts in quite a while. First bullish divergences in some time, and the bulls should, quote unquote, take the ball and run with it. And if they don't, that's going to be uber bearish, in my opinion. In other words, if the divergences fail to materialize for a tradable bounce, or really a run to the new highs, to the next new highs in the market, because that has been the MO for well over a year now. So far, we got a 4%, measly 4.5% bounce out of that. It's not over yet, I will say that, but I think that's all we're going to get. Again, we hit multiple resistance levels. We had a typical Fibonacci retracement, as I covered, of 61.8, I believe it was. We hit the gap resistance, and so far the sellers have stepped in, and that's it. So let me go to the SPY 60-minute chart, then I'll run out to the daily charts, then we'll move on, get off the indexes. So on SPY, you had a pretty well-defined downtrend line right there, right? You had the same big bullish divergent low that I highlighted. You had a rally, but so far, this breakout above the downtrend line, and remember, QQQ failed to break out of a comparable downtrend line, so that would have been no number one, in my opinion, for those bullish buying this breakout. You want to see both indexes break out of the comparable downtrend lines if they're in close proximity. So the fact you had one and not the other, there was no confirming follow through with QQQ, and now where we are today, so far that breakout has failed, which gives not a huge one, but another check mark for the bears. The fact we had a failed breakout, aka bull trap, false breakout, whatever you want to call it. Bulls also had an opportunity on SPY to backfill the gap right there and take it from there. I'm referring to this gap, but failed to do so. So they backfilled the gap, but we kept on going. And again, anybody's game right now, let's just say until we take out T5. That was when T5 was hit. T6 is the next target on the 60-minute chart, 422.46. And I would be remiss not to acknowledge if we do take another marginal new low, maybe all the way down to my sixth target there on SPY, we can do so and still have positive divergence in place. Anything much more than that, the divergence will be negated or taken out via lower lows, taking out these previous lows and the indicators. And again, to me, that'll be the I'm not going to say the most bearish development I've seen in a long time, but one of them, and that's what I'll be looking for. So on the daily chart, this one's busy, but I still have, as I have for a while since back here, I have the indexes coming back to test their 200-day moving averages, and SPY coming down to about that 410, 411 area. That's on the daily chart. QQQ. If we get another new low, we take out the recent lows. I jumped over to a daily chart here. We're going to have taken out this uptrend line. This uptrend line on the daily chart on QQQ starts back in those September lows. We had a nice reaction low there around beginning of November. Another clean, distinct reaction low around March, early March. Another one in early May right there. Actually, a couple there. and more recently right there. So what is counting? 1, 2, 3, 4, 5 distinct reactions, and in the past, they usually gobbled it up after a few days and went on to the next new high in the market. So far, they sold into the bounce. Now it's not over. We are at trendline support or just a hair above it right now. But as I just said a minute ago, solid break under the recent lows right there, especially and most importantly, a daily close below it will give me a big old check mark for the bearish case right there. And remember that first target remains right above 342 or so. We have it at 343, but again, I think we'll probably overshoot that a little, so you may want to trail stops down once Q's hit 343, let it run. I suspect if we get it, we'll probably undercut the 200s, or at least there's a decent chance, I should say, and carry us down to about 335.54. If they do, that's probably where the buyers will step in and back test or try to regain the 200. So just that's near-term stuff. And so still looking at whatever it was yesterday minus what we dropped today, so about another 4% now. Yesterday was about 5. Qs are down about a 0.75% today, and that's that. Okay, so yesterday I laid out the near-term bullish case for Treasury bonds. Nice positive divergence on the 60-minute charts of the 30-year and 10-year bonds. This is TLT, the long bond, 30-year coming. It was just above support there, and we've had this right here is the 1.5% gain, 1.55% up, is the biggest gain that we've had in months for TLT. So congrats to you that caught it. We had the bullish divergence on the 60-minute chart right there. It's covered in the video. That's where we were yesterday, and boom, there's today's move. So nice, 1.5% or so gain. So okay, I had to quickly pause the video there for a phone call. And while I was talking, just doodling, added a few lines here, some resistance levels. Would have normally done that while the video was going, but either way, that's it. So this was the first resistance on the 60-minute chart, which would close a hair above today, 143.65. I wouldn't even consider it a first target. It was a nice move in the futures. That's about a $1,300 lift in each contract of the ZB, the futures, yes, since where they were yesterday, highlighted in the video. And I still think we'll carry up to at least that 145.46. I'll get to the futures in a second there. And then we have a few of that's minor right there, 146 in the middle. And then there's some moderate, I'd call it, resistance up there, about 146.73. And then if we can get a real rally going here, which would likely coincide with a bigger drop in the stock market, that could carry the TLT all the way up here to about almost 152. That's at 153. Nope, I'm sorry, 151.83. So that's TLT. Again, it was covered yesterday. IEF is the 10-year, 7 to 10-year Treasury. And there's the best I can do for a downtrend line right there, right about there. And so this is a bullish falling wedge pattern on the 60-minute chart, which was broken out. So that gives you a buy signal. And it's really, you're not going to get as much juice on the 10-year. The longer the term of the bond, higher the duration, meaning more sensitive it is to move in interest rates. So typically, if you get the call on bonds right, you're going to make more money trading ZB or TLT versus the 10-year bond, which is ZN for the futures, or IEF. It's simple. It's the same logic I use, trading QQQ over SPY. You're just going to get, you're either going to get the call in the stock market right or wrong, and if you get it right, much more often than not, you'll make more money on QQQ than you will on SPY. Let me give you a target in case you are trading EF or just wondering where rates might be headed. That would certainly be a nice level. That's really nice. It was nice support there, about 116.44, and you got a gap right there and some resistance here. First stop is about 114.92, and then traders like these reaction highs. Plus, there's some gaps in there, so there's some near-term targets for IEF. ZB, 30-year futures, 30-year bond or long bond futures. 3-month chart, 60-minute candles, positive divergence. Again, this is where we were yesterday, and a nice up today. First resistance is there about 158.222, 159.240, and then 161.87. Remember, the leverage factor is 1,000 on these, so if you buy one contract, Yes, today we closed, or we're trading right now, I should say, as I'm doing this at 158,260. So that's $158,260 of exposure, if you will, to Treasury bonds. So if you get 1% on that, you're going to make 1,500 bucks, or almost 1,600 bucks. And then the targets, next stop should be about 159,240, and then there's that reaction high up there about 160, 187. Certainly the potential for more. Let's just near term, like I said, longer term, much longer term, the outlook for treasuries I think is nothing short of abysmal. But we're not trading. I'm not investing or trading long-term bonds right now. It's just not worth it. I'm taking the just looking at this as a short-term trading op. Bounce trade idea. And then ZN, there's your 10-year bond futures. There's your bullish falling wedge, and this one has not broken out. So they call it a trade setup if you didn't take them yesterday. Break of this 60-minute bullish falling wedge pattern. Nope, sorry, 120-minute. These are 2-hour candles instead of 60-minute. I'm showing you the bigger picture here. There's a longer-term trend line that was broken. That was the bearish rising wedge. Was highlighted there yesterday. Broke down right there, and then we had a breakdown and back test here. So on the way up, levels are going to be of course that trend line first, the downtrend line, and what's nice is it lines up with that 131.077 resistance. You had a reaction low right there, and enough reactions back here I think to validate that. So pop above that, targets would be about 131,258. Of course, that reaction high right there, and then that line up there, 132,231. Okay, and I'm keeping this video short. There's just not a whole other thing, a lot out there else to point out today. Everything else I've been watching, it's kind of moderate moves, nothing big today. But this one is now on my radar. You may recall several months back, I was highlighting, harping on lumber, how lumber is either often in full throttle mode up or full throttle mode down. Most importantly, when you recognize parabolic advances, extreme overbought runs in lumber like we had last year, earlier this year, I said those are followed by nearly equally as powerful corrections, and we certainly got that. We actually overshot to the downside my targets on lumber, but was certainly a very, very swift drop once we got the sell signal. And likewise, then lumber set up recently was a bullish trade setup, still is, and it's had a nice run up now. And so again, what I was harping on back then is that you can get a lot of meat off the bone when you capture trends on lumber. I mean, you can sit there. Some people like to trade utilities. Some people like to trade bonds. I said you can make some of the wealthiest traders in the world are bond traders. They're just leveraging up to get those moves. But if you don't want to have to leverage up, or you want something that just moves quick and trends very well, this is your animal right here. DJUSAL, I'm showing you the aluminum index. So these are aluminum prices, and I'm going to show you the trends here. Let me just show you what I see here first of all. Just beautiful little patterns here, particularly mainly look at these divergences. Look at that nice divergent low. It's simple stuff, but highly effective. And this is, I should start out, guys, by the way, a weekly chart. We're going back for years. This goes into 2010. So we're covering well over a decade, 12 plus years here. And you can see we're in a downtrend when you broke out. And the run from low to high I measured here was 122%. From that low came in about middle of 2013, and it peaked, the run peaked in about October of 2014 for 122% gain. And you can see here, I have trend lines drawn. There was a nice clean up trend line. There was a break, and it was a big drop well into the double digits. But what happened when we broke the trend line, we didn't have any negative divergence right here. You had an overbought reading, and it certainly led to a big correction, but no divergences on the indicator until we had a kickback. A little snapback rally took us to a marginal new high, so that's where I measured the divergences. Then we had divergences at that point. There's our negative divergence at both indicators, and that was followed by a 65% drop right there. So aluminum prices got clobbered, nice 65% drop. Would have been great to be short, just over a year or so on that trend. And I think you get the picture now. Watch, rinse, repeat. That ended with positive, nice, clean, positive divergence. When I say clean, clean separation in the troughs on the indicators on the RSI and PPO. And that divergent low was followed by a 287% rally all the way up to this point here to the highs. And yeah, you got it. Ended with negative divergence. And you know, you could short divergence, or you could short that first divergent high, and that was probably, I don't know, 30% or more pullback. It's a volatile security, or I'm sorry, volatile commodity, yeah, and security. Um, but there's a breakdown and backtest. So there was your sell signal, and that would have got you short for the bulk of that 92% drop in aluminum prices right there. So there it is. You know, hey, did COVID hit? Yes. Did COVID help? Certainly provide a tailwind to that trade. Yeah. But was a drop in aluminum clearly telegraphed in advance long before COVID hit? Absolutely. And aluminum was already in a downtrend. So, like everything else, raw material prices, a lot of things went crazy since the bottom there in March of 2020, and it has been a 983% rally, almost 1,000% gain in aluminum prices. And what do I see? Everything I like to see. I see overbought, just like I did back then, leading up to the drop. And then remember, overbought is not a sell signal. We're overbought here, but guess what? Yeah, there was a correction, big one too. We're overbought again. Yeah, there was another correction, big one too. Now we are overbought with negative divergence. So if you can't tell from my voice and everything I just explained, this is one of the best looking setups I see at the time. When do you get in? Well, there's your line right there. This one's a tricky one. The futures are very liquid. I'm going to show you an ETF that you can trade on aluminum, and that would be JJU. So you may want to watch, you know, the chart of the Dow Jones Aluminum Index. I'll, you know, wait for that. Or you can use this chart. I will say this is not a very actively traded, it's a thinly traded ETF. There's not many options out there, and I welcome. I searched today, and in the past I haven't been aware of any other ones. When I type in aluminum, looking for, I already did it. Let me just tell you, if you guys know of one, or one that will short aluminum, an inverse ETF, let me know. Otherwise, I believe this is the only one out there right now, and that's again JJU, iPath, Bloomberg Aluminum Total Return Index, or ETF, ETN. There's a minor trend line that might do the trick. I'll tell you, we're getting close. You might want to just scale in with these divergences, leave it plenty of room to add to and not get underwater. Don't ever underestimate something once it starts going parabolic. That last run in lumber told us, you know, showed us how far it could go before it finally breaks. But at minimum here, bare minimum, looking for a pullback to this trend line and that 55.70-ish support level. That would be from where we're at today, a drop of about 15%. So, you know, if you took, again, shorting it now would just be a shot in the dark. It might work because we have some divergences building finally on the daily chart. But for targeting a 15% drop, you need to give yourself at least a 5% stop. That may work, may not. Again, I like to ease in, either scale in now, start taking a position, or wait for some type of reversal here. I believe the top is pretty darn close, but again, we don't have the sell signals yet. Additional targets. Remember, 15% is nothing when you go back to the chart I just showed you, a history of, you know, the last several times in recent years, over a decade, when we had sell signals on this. You're looking at, 65% and a 92% drop. I don't expect another 90-something% drop. I believe we are in a new era of inflation, and you know, these commodities are just going to be certainly some pretty nice short trades to be had when trend lines correct, when we get a reversal over time. I think aluminum prices will probably take out that previous high, and they may run up there now. By the way, that would be an objective shorting level. Traders love previous reaction highs. Look at this one. See when lumber, I keep calling it lumber, aluminum topped there and it dropped 65%. Well, guess where it topped? Exactly where it peaked back in early 2011. So That's an easy all eyes on target. And with lumber, I'm sorry, again, aluminum so extended, almost up 1,000% since March of last year. I'm gonna bet that I think there's a good chance we're gonna break that trend line before we get there. I think if it's it'd be like hitting the easy button. And now look, if we get there, it's an objective short. Even if we overshoot it and we still have those divergences, I would actually be adding on that overshoot as well. But again, I suspect we'll probably fall a little shy of that major reaction. A high only because too many eyes are looking at that. When too many eyes are looking at a level, one of two things happens, in my opinion, or from my experience. You either blast right on through there and keep going and blow out all the shorts that shorted that to high, or you reverse shy of it with an impulsive reversal, denying all those that were waiting to short and all the longs that were waiting for that level to get hit. And that's what the market likes to do. Any security. This is not the stock market, but it's a security, and any instrument that you can trade is a security, and this particular one's a commodity, and that's what I think will happen. So there it is. And whatever I think, I can tell you this: I will think a lot more. My convictions will go a lot higher once we get a solid break, especially a weekly close. Remember, this is a weekly chart, so weekly candles are what you want to see to help confirm a swing short position. Sometimes you break down and get a kickback rally. Sometimes you break down and never look back. You had a little snap back there after the breakdown, but then a big drop after that. Okay, I'm going to wrap it up here. And before I do, I just wanted to say, and again, I welcome if anybody knows of another ETF, ETN type instrument that direct play on aluminum prices, let me know. There's also JJUFF, which is the older version. iPath a few years ago retired a lot of their ETNs that track commodities, whether it was metals or grains, and the old ones still trade. Was over the counter somewhere, but the volumes are drying up. They're not going to support these anymore. They moved to the new ones. So the FF means that's what they added on their old symbols. So it used to be JJU. You go back on the site, you'll probably see old posts on JJU, and what you can use it for. You can see these funky candles here. That just shows you there's hardly any volume anymore going on in this thing, any trading. But you can look at a weekly chart and see that's when it was the main aluminum ETF that they had, or ETN again. Be a stickler for details, they're very similar. But look at that, nice with support right here. That support was broken, it was back tested here. We rallied up again, failed right there, and that's where we're at right now. So that's, for this alone, I think it's worth taking a shot, starting to layer into this thing at this point in time. If you're maybe an aggressive trader, and if not, wait for the confirmed sell signal that I talked about on the weekly chart. Okay, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.